Number two is the short-term rental loophole. Now, this one can get kind of complicated, but it's a beautiful strategy because this can save you hundreds of thousands of dollars. And if you implement this the first year that you put your short-term rental into service. So the year that you put a short-term rental into service, and it doesn't matter. I know some people own their short-term rentals, or some people are arbitraging their short-term rentals. They're subletting another place and renting it out. Doesn't matter. You can implement the short-term rental loophole. And what that looks like, who can use this? Real estate investors renting properties on a short-term basis. Short-term in the IRS eyes is 7 days and under. So if you're renting the properties out for short-term basis, 7 days and under, and actively managing them, you're actually doing the work, you can actually use this loophole. So what this does, why this strategy matters so much is because a lot of times when you're doing real estate, as far as owning real estate traditionally, you have these huge losses. So say, for example, you bring in $50,000 in income and your rental deductions equal $100,000. That leaves you with a loss of $50,000, right? But that doesn't necessarily mean that you get to take all that loss in that year. Based upon your income, you may be only able to take $25,000 in that year. So what happens to the other $25,000? It sits there until you can use it. And the only way you can use it is the next year, right? Or the next year if you don't qualify at that time. So this is why a lot of people want to qualify as real estate professional. We call it REPS, REPS. A lot of people want to qualify for real estate professional because if you qualify for real estate professional status, that means you get to take 100% of your losses. And what you can do with those losses is, if you have regular W-2 income, you get to offset anything with that. Let's say you got a $50,000 loss, and with your W-2 income, you have a tax liability of $20,000. You can offset that $20,000 with that rental loss if you're a real estate professional, right? And real estate professional does not mean that you have a real estate license. A lot of people thought that and got audited on it, right? So real estate professional means that your primary source of income is all real estate related. Either you're renting properties, you're maintaining properties, you're managing properties, something of the sort, but your primary income source is real estate as a real estate professional, right? And so this is a strategy that has gotten abused. That status has gotten abused so much. So it's a high red flag for the IRS whenever they see a real estate professional status, because it allows you to open up all losses and offset all of your other income. So of course they're going to be really mindful of that, because hey, you can end up never paying taxes with that, which is perfect, right? But the one thing that they want to keep mindful of, so anytime, one red flag that they get when you have real estate professional status is, do you have a W-2 from another job? So if you have a W-2 from a regular job, they're like, there's no way you could have met all the requirements to meet the status. So then you get an audit, and then you got to go back and prove that this is your sole source of income, that everything you do is real estate related. And that's hard if you do have a W-2. If you have a full-time job, that's nearly impossible to prove. And what happens is when you get audited, they throw that status out and make you refigure everything. But with this short-term rental loophole status, you don't even have to qualify as a real estate professional to actually benefit by offsetting all of your losses here with this strategy. So that's the beauty of this strategy. It gives you that real estate professional status without having to do all of the other pieces to it. Thank you for watching. Don't forget to like, share, and subscribe.